Good day to everybody. I am Nicholas Bornodis, President of Capital Link, and I would like to welcome you today to our webinar on the container shipping sector. As you know, Capital Link is hosting from time to time, actually with a regular frequency, a series of webinars on critical topics on the industry. And we are frankly very happy today to have a top-level panel on one of the most interesting and vibrant sectors in the shipping industry, the container market. I would like to thank Chris Wetherbee from Citi, who is going to be our moderator. And of course, I'd like to thank Constantin Baack from MPC Containers, Aristides, Pittas from Euroseas, Kalogiratos from Capital Project Partners, and Iraklis Prokopakis from Danaos. We have great participation already from delegates all over the world. Before I go, I would like to remind you that we look forward to having everybody with us again on March 2nd and 3rd, when we're hosting our annual spring shipping conference in partnership with Citi. And Chris Wetherbee, of course, is one of the main people who are helping with the heavy lifting for that event. So Chris and everybody, thank you for joining us.
Great. Thanks, Nicholas, for hosting. As always, these are great opportunities for us to get together and chat about the markets. And yes, we are also looking forward to the March conference. For those of you on the investment side, certainly if you're interested in one-on-one meetings, let us know. We're hosting quite a few, and I think it's going to be a great opportunity to get in front of some very interesting people and talk about shipping, which is what we want to do this morning. So at least morning in New York, which is where I am. So again, thanks for all the panelists joining. I really kind of want to just jump right in. It's clear that this market is enjoying some strength right now. And we've probably seen rates continue to rise, pretty consistently over the course of the last week, which is either a good thing or a bad thing for the panelists, depending on when you fixed your charters, which was just noted by Aristides. So let's kind of just jump into the current events. I think that'll be a very interesting way to start and sort of see what's going on. We hear a lot about blank sailings right now. The Trans-Pacific in particular seems to be quite robust in terms of the demand there. I heard the other day that there are 30 plus ships sitting off the coast of Los Angeles, Long Beach, waiting to unload cargo. Congestion is starting to build. So maybe we can talk a little bit about maybe sort of from a macro perspective, what you guys are seeing in the market on the container shipping side. So why don't I start with Constantin? So maybe I'll throw it to you. What's sort of the pace of the market? Why are things so strong right now?
Well, first of all, we have obviously a combination of volume backlog and a bit of catch up, which is still happening as we speak, paired with congestion and equipment shortages. And in addition, and I think that is at least something that we expect, that the Chinese New Year this year will take a bit of a different shape and form, and it will, at least as far as I'm aware, and I believe it will be less inactivity in terms of production and manufacturing of goods. So that will actually add to the currently still pretty strong order backlog in terms of volume. So we expect that there will be a few blank sailings, in particular on some of the, let's say, main lane trades, I think to a less extent on smaller vessels. So overall, we believe, and we're now entering the busiest season, the spring season, basically in container shipping. So that will add some dynamics. But that's at least how we see the volumes at present, which will also affect the charter market, obviously.
Got it. That's helpful. Aristides, what are you hearing about how Chinese New Year is going to play out? From what we're hearing here in the U.S., there's a sense that certainly from a Transpac perspective, we're going to see vessel sailings down relative to where we were before, but really still actually quite robust, as there's a desire to continue to ship through the holiday in order to try to alleviate some congestion. So what are you hearing about the next several weeks as you think about the container market?
Yes, historically, the Chinese New Year is about a month, which is very slow. And but this starts even a month before that. We start seeing signs that things are starting to slow down. Now we're in the Chinese New Year, and the market is still picking up. So I think there will be lesser shipments out of China for the next couple of weeks. We hear that they will keep working more than other years and protract somehow the duration of this, but there will be activity. So, but you know, even with less activity, which we think there will be, we will still continue to see the market full. We have, you said 30 ships in LA. I read today it was 40 ships waiting in LA. So the numbers are growing. The blank sailings are there, not because the liners are trying to be smart and take capacity out so that they increase the freight rates. They are there, they are blanking because they don't have the capacity to do more, to lift more cargo. So overall, I think that while we might see a stabilization during February, I don't expect to see a drop. And even this stabilization is a little bit questionable because every day is higher.
It certainly seems that way. And so, Jerry, what's your take? I mean, demand has obviously been quite robust from developed economies around the world, and particularly coming out of the United States. Savings rates are very elevated. So when you think about the macro dynamics, you know, are you surprised by the resilience of the consumer coming through COVID? There's obviously been a lot of stimulus. There's discussion of stimulus to come. So what's your outlook for the overall demand dynamic for container shipping as you move kind of through Chinese New Year and then maybe into sort of the second quarter and potentially beyond? I think, Jerry, you might be on mute. There you go.
Yeah, that's got it. So, Chris, if you asked, I think, any market participant back in May, June, it was very dire predictions. I think at the time, analysts were expecting the market to contract by 11%. Almost now, this projection has been revised to minus 1%. So a huge recovery in demand. I think what many of us did not foresee, and that includes, I think, not just ship owners, but also liners and every analyst out there, was how COVID would impact consumer behavior. The fact that we are not consuming experiences anymore, so we don't spend money on traveling, restaurants, and whatnot, means that there is pent-up demand for ordering products that have to be shipped across the globe. So that, together with what Aristides mentioned before, the fact that you have a port congestion and in almost every major port in the world, has created a very different dynamic. If you add to that the restocking, or if you want the more inventory building in view of the demand going forward, we have a very strong market. I mean, I was just reading that 2 weeks ago, 700 dock workers in California tested positive for COVID, and 1,800 dock workers had to be quarantined because of contact tracing and whatnot, and were not serving ships. So as long as we have this kind of environment, and it seems that this is going to drag out, you know, vaccinations is a little slower than we thought. There's the issues of new strains of COVID. Quarantine quarantine rules are becoming much stricter. I think we are in for a good market. So supply restricted, at the same time increased demand. So it looks pretty tight at this point.
Got it. Iraklis, let's get you into this conversation as well. When you think about sort of inventory levels, you know, looking again through the macro lens, it would appear that they're fairly depleted. So, you know, what's your take on, you know, inventory levels? What are you hearing from your liner partners about the demand for your vessels as you move forward into second quarter and potentially, you know, the second half of the year?
Look, I don't really know what is the inventory situation with the retailers. But we are facing a very typical situation of supply and demand case here. And after June, it is very obvious that the demand of finished good was tremendous. There are some very nice charts showing a movement of expenditure from services to retail goods, and that was a very, very strong boost into the transportation. We have, of course, very limited tonnage in the spot market, not in number of vessels, but in number of TEUs, because most of our large tonnage is on long-term charters. But we have seen that every fixture we do yesterday, there is a better fixture the next day. And it seems that the market is very strong. I don't know what's going to happen when the situation in the consuming nations will be restored gradually back to normal, and some of the wealth will be transferred from purchasing to services. But with all indications, we see that the demand will remain very strong for the next couple of years. So we believe that for the next couple of years, we are going to have really a very strong demand in all sizes and a very good charter market together with a very good box rate market.
Yep. Okay, that's helpful. I get a lot of questions from investors about blank sailings and how to think about it. So, maybe that's the next question that we should try to tackle. So Constantin, how do we think about blank sailings? It appears that the liner companies are being, or originally being quite rational when demand was softer, using blank sailings to manage capacity and keep rates relatively elevated on the box level. As we flash forward to where we are today with demand quite robust and capacity constrained and congestion around there, it appears that blank sailings are now coming in as a tool to try to ease some of that congestion. So can you talk a little bit about, sort of generally speaking, what you're hearing about blank sailings, and then specifically, how does it impact a company that provides capacity into the market, if at all?
Sure. I mean, as pointed out by some of my fellow panelists earlier, I mean, the blank sailings now are not due to lack of volumes. They are kind of more structural blank sailings, as you said, as a consequence of COVID. I mean, there are instances where simply equipment availability limits the ability of liners to, or actually triggers a blank sailing as such. And the congestions in the US do their fair share on that very aspect. In terms of how liners manage it, yes, especially last year in March, April, May, blank sailings and redelivering of ships that were actually spot ships, and we were pretty much affected by that because we have quite, to some extent, spot tonnage. It allowed them to kind of use the element of blanking sailings and redelivering vessels that they don't need, that were on more flexible time charters, as a means to make sure, at least the freight rates don't go down if already the volumes go down. So I think it is a measure to address that. Secondly, consolidation and the alliances have helped to better steer the service offering and structure blank sailings to assist liners in addressing some of the especially the market disruption we have seen a few months back. Going forward, obviously, more vessels are now on longer term charter, so blanking sailings is still an option, but redelivering vessels is not that much of an option for liner companies, because of the fact that not just rates are up, but also the periods have increased significantly, especially on those vessels that are more flexibly used by liner companies, meaning more regional vessels between 1,000 and 5,000 TEU. So I think, yes, there is more discipline. Yes, there is more due to consolidation in the alliances, better hand in glove working of some of the liners to addressing certain things. And going forward, that will always be a mean, but you also have to consider the charter situation and charter in situation of vessels. Okay,
that certainly makes sense. Aristides, what's your take? I mean, is there any impact that you guys see in terms of blank sailings on your fleet? Do you think that do you think that we can start to see congestion ease to the point where blank sailings are not going to be part of the discussion as we get into, let's say, more the traditional strength of the spring, so April, May, June?
Difficult to say because it will depend a lot on demand. Right now, we know that the systems are strained because of the excess demand that we have seen, because the money that was poured into the economy, the global economy by central bankers has found a way to the consumer. And as somebody else said, people are spending in manufactured goods that are transported by containers in the vast majority, rather than in holidays and bars and drinking and eating and going out. So the demand has increased. And there is obviously the expectation that as we deal with COVID and as we get vaccinated and more immune, that might start changing. But even if it changes, demand still seems that it will be there. So I don't think it will be very easy to get away and to start again seeing blank sailings triggered by the liner companies in order to keep up box rates. This is not going to happen. One thing that has happened is that we do not have enough ships. I think this is quite clear to serve the current situation. And I think the demand is going to continue being strong. People are saying that it will be even stronger. And the supply, we know, at least for the next 2 years, is constrained. We are now seeing orders for 2023, but just keeping to this first couple of years, it seems that new ships will not be coming to the market more than about 10% altogether, which is not that much if you take into account that some scrapping will happen and there will be some slippage and all that stuff for 2 years. So if demand develops as people are saying, as the specialists are saying, we should be in for a couple of good years. I think this is a consensus at this point. I can say, just to tell the audience here, that what we say is probably consensus, and we had the consensus last year when we were doing this seminar and the market was lousy, that it would be very bad. And it turned out that because of the stimulus that was provided in the economy and the change in the way that people consumed, the market after 4 months started going up, and the last 6 months, every day it's higher. So I caution the audience, but the consensus, the logical consensus, unless we miss something, is that it's going to be a couple of good years.
It's funny how consensus can change like that. So I agree with you. It's the stuff that you don't know about that has a tendency to make things shift. So Jerry, let's talk about rates. We were talking about before we got the webinar started, and obviously things are quite robust. So let's sort of start with sort of the short term. Like, box rates are good. Short term obviously is good. So let's talk about sort of how you're thinking about evolving your strategy, if you are at all, to try to take advantage of this. Is it time to start trying to get longer duration? I know Constantin talked about that a little bit. Do you want to just sort of stick to shorter term potential opportunities? Because like we've heard before, every day the charter rates seem to be going up. So if you fix today, you might feel like you're not getting everything you could potentially get tomorrow. So what's the strategy here? Because things are robust and they're moving in the right direction.
Yeah, that's a great question, Chris. I think we did the right thing back in May, June. We had a couple of post-Panamaxes opening up, and it was pretty clear back then that the risk was on the upside. So we fixed for really the shorters that we could, and without giving up options. And that has actually worked out quite well. So we fixed for 60 to 90 days, at least one ship, and then she opened up again in September, and we had another one. We have another one opening up soon. So it was very easy back then because we knew that it couldn't get much worse. Now, as you say, things get better every day. But as you move at above average historical rates, let's say for cost by Panamax wide being 9,000 TEU, above $40,000 per day. I think these are the kind of rates that you will also try to lock in for longer. Right now, there is a bit of a flattening curve with regard to rates. I mean, on the one hand, many owners want to take advantage of these rates, and they are pushing for longer-term deals, and these are happening, unlike 2-3 months ago. So we have seen 3-5-year deals for large modern tonnage, and I think we will try to follow that philosophy. So right now is the time to lock in for longer. There is, of course, always the risk that tomorrow will be a better day. But where I slightly disagree with Aristides, despite demand is consensus, I agree with that. But the supply, as I said earlier on, is also artificially restricted because of COVID. So I don't think that this will be lifted anytime soon. So it's not a question of 3 or 6 months. I think the supply restrictions, congestion, which is caused by COVID, will take a while to clear up. But when it does, we should have a slightly lower equilibrium. This does not mean that we will have a much worse market, but it does feel that current rates, freight rates for sure, are unsustainable. We are at a place right now where importers are thinking twice about importing outside fixed contracts. You are at a place where importers are looking to load containers in open hatch handies or multi-purpose vessels. So I don't think we are at an equilibrium that is sustainable long term. So you know, it might last for a while, but why not fix some of these good rates? You cannot go very wrong if you take it over, if you look at this over time.
Got it. That's helpful. And Iraklis, let's come to you in terms of your strategy around, fixing vessels. Obviously, a strong market. So what do? Do you stay short? Do you go longer term? How do you manage that risk and that opportunity?
First of all, we have to define what do we mean by short term and long term. And there is a correlation as far as the period is concerned with the size of the vessels. So it's a different thing to talk about feeders and a different thing to talk about post-Panamax or 8,000 TEU container vessels. Our basic strategy is always long-term. We do not charter, or we are trying not to charter before less than 1 year, and we are shooting for 2-year charters. And this is our views. Of course, you have to also comply with the views of the customers, with the liner companies. The liner companies, they are there to offer 2-year charter at a marginal discount to 1 year for larger vessels, but they are trying to keep 1-year charters for smaller vessels. So I don't know if I have answered your question, but our view is always looking long rather than short.
Okay. Yeah, no, that's helpful. That's very helpful. Appreciate that. So, I can't resist. Whenever we talk about consensus thoughts, it always starts to make me feel like it's time to start thinking about the potential opportunities on the other side of the coin, or maybe the risks here. So maybe Constantin, from a just a demand perspective, what if we're sort of in the second half of 2021 and we've made some progress, sort of God willing, on vaccines, and the virus is sort of less of an issue for us, and all of us decided it's time to take a vacation. You know, I need to take my family to Disney World or something like that, and all of us want to do the same thing. What do you think the real risk is in terms of demand? Is that something that we think is a potential issue, or is there just too much stimulus out there? Our inventory is too low that maybe we see this lasting for a much longer time than we think?
Well, that's obviously a very good question. And I think forecasting the demand side for the last 2 years, I mean, everyone has been completely wrong, right? We have always been surprised by disruptive events, be it trade war, be it COVID. First of all, disruptive on the negative volume side. Now, for container shipping, at least, as an accelerator for rates. So I'm always a bit cautious in providing projections on the demand side. I think demand side might be affected by some of the events that you have, put on the table just now. But on the other hand, I personally think, looking at it from a more global perspective, global population will grow. Consumption of containerized goods will continue to grow. There might be a bend in the curve, but demand always has to be seen in context of supply as well, especially if you look, and this is let's say, a ship owners panel as such, if you look at the charter rate environment and the equilibrium of demand and supply when it comes to tonnage. And there, I'm pretty positive that, especially given the fact that vessels are now being taken out of the market for a prolonged period across sizes, which we haven't seen in 10, 12 years, will mean we will see, certainly on the charter market, a stabilization, right? The vessels will be simply not available to the market. We have chartered a 1,000 TEU ship just now for 2 years, right? This vessel usually would become available to the market every 2 months. And this is now out. And this is across sizes, across segments, that we not just see charter rates higher, but also periods. And I think this is a very important factor when looking at the different dynamics. I would think, a slight bend in the curve on demand volumes, container volumes. We cannot rule that out. But I personally think this, in the overall context, will not be a game changer, especially if you look at demand and supply in overall, basically.
Yeah, got it. Okay, helpful. Aristides, what's your take on chartering strategy? I didn't ask you that question. How do you guys approach that at Euroseas?
Yes. So let me start by saying something in response to what my fellow panelists said. Yeah, I did say that demand is the difficult thing to predict, and we rely very much on economists and other organizations to come up with that response. But you are right that firstly, Jerry is right that congestion, of course, at some point will somehow ease, especially for the larger vessels. It's not such a main concern for us because we have the smaller vessels that do inter-regional trade, and there we have not seen congestion issues. The congestion issues are mainly on the bigger vessels that go to the bigger ports and the east-west trades. So that is not an issue there. So having said that, and having ships between 1,500 and 5,000 TEU, which is, let's say, the smaller ships of today, the fact that we are fixing 1 and 2 years charters is probably around the longest that one can fix. We have been fixing 2 to 6 months in the past. Now we're doing 1 to 2 years. Maybe we'll be able to do 3 years on some vessels, but mainly 1 to 2 years. And this is what we're doing. And because all our ships don't open up together, we're doing this in a staggered basis. And hopefully we will continue doing that. And I hope that every fixture we do, we will be saying that it was a bad fixture at the end. We should have waited and did the one that was available next week. So yes, but we will fix it. We will be profitable. All the panelist companies will be profitable companies. And now we have to see what we do with all our profits. I think this is the main concern of most of us right now.
Got it. Okay, that's helpful. So let's talk about the supply side. I think that's an interesting piece of it. So Jerry, I guess two questions here. What is your bigger picture about the industry from a supply perspective? Will there be a supply demand coming at some point in response to the race, meaning more orders coming in? And then specific from a capital perspective, how are you guys managing your fleet? Is there anything you want to do with capacity?
So I think looking back, how the market has reacted to similar kind of environments in the past, so far it has been a very reasonable reaction in terms of new build ordering. We have seen, let's say, the order book move from the historical lows of 8% to 10%. As you know, this is a very small increase and still a very reasonable order book, historically speaking. The majority of these orders were very ultra large containers ordered by liners. So I think so far the reaction of the industry has been fairly reasonable. I was never one to believe that owners or market pundits tend to self-discipline. So there's a reason for that, obviously. Today there's a lot more uncertainty. There are financial constraints. There are fewer owners and liners than there used to be. I think liners, up to a certain extent, have prioritized debt repayment so far, but they're turning increasingly their eyes to growth. And of course, there's the elephant in the room, which is called propulsion, and what will be the dominant technology going forward, if any. So as far as we are concerned, and now I'm also including the sponsor, Capital Maritime and Trading, it has been in the press that we have already ordered ships, 13,000 TEU containers with high reefer capacity. That's 6 ships at Hyundai Heavy. These are, let's say, particularly adapt for the Latin American trade, but also very energy efficient ships. In terms of their emissions footprint per ton mile, they can offer a reduction of up to 50% compared to a ship that was built 10 years ago. So I think in this environment, given the demand that we see, and also the fact that these are very competitive ships in terms of emissions, even if they are not, even their propulsion is conventional, we proceeded to order certain ships. And I'm sure, and we're hearing that other owners are doing the same. But so far, I think, given the market backdrop, it has been very reasonable. And for the reasons that I mentioned before, I don't think we will see a repeat of what we saw many years ago of the order book effectively doubling within a few months or a year.
Okay, that's helpful. I appreciate the color. Iraklis, let's come to you and talk about the same thing. So how do you think about the order book? I do want to get to propulsion in a minute, but just kind of curious about your take and Danaos' approach to managing the fleet.
First of all, speculative ordering into the container industry was not really the theme, and I do not expect to be also in the future. So I do not expect from the charter owners any sort of speculative ordering. Then we have the liner companies. The liner companies, we have seen some ordering only from the companies that they were lagging behind tonnage, and they had to go to some ordering for their own survival purposes, like Evergreen and HMM. Therefore, because we have also the technological risk and the emission trading risk in front of us, I do not really see any appetite for ordering. Therefore, on the assumption that the demand will remain robust, and if we believe what most of the liner companies they have said about they have enough tonnage already, I do not really see the order book to go close to 20% of the existing fleet or something like this.
Okay, that's helpful. I appreciate that. I guess coming to you, Constantin, same question. I think it's a really important one. So I do want to get kind of everybody's take on the order book, because I think that's, you know, that's where we've had issues in the past. Obviously, demand is going to do what it's going to do. How do you think about ordering? What are you guys going to do?
Well, first of all, I think we actually need orders when I look at the demand and supply situation going forward, right? I did mention earlier that I mean the demand with the world population and growing and you know the overall trend, we will see continuous demand growth. I mean, with the exception of 2009 and last year, which came in only marginal below zero eventually, we will see growth in demand. And the order book is yes, it has been increasing, but I personally think that you know, if you look at the sizes where you have hardly any orders between 1 and let's say 8 or 10,000 TEU, you will see negative supply growth going forward. So something has to happen. Now that's kind of where we stand from an industry perspective. Now, taking a technology risk on propulsion technology that is yet to be determined, I think it's easier on the larger vessels to opt for dual fuel options, etc. These are key assets where also the liner companies either use their own balance sheet or are willing to provide longer term charter backing, which is needed, because the discipline that we have seen on capacity management is also something that we now see on the owner side, not ordering speculatively new vessels. So especially if you don't get a long-term charter against a new build, which is still a commercially challenging question, because in the end, technology risk, residual value risk from an owner perspective are the key risks that you are currently facing if you consider an order. So I think we're back to the question of what's the right propulsion. Are you able to get charter backing on new builds? Because I think speculative orders we will see very rarely. So that's also where we stand. I mean, we're obviously, you know, looking at the various options in terms of propulsion technology and so forth, but I think there's no clear winner yet, and that's why I think going forward there will be new orders, but they are also needed. But it will depend also on the appetite of the liners to either take them on their own book or provide a charter backing for those orders.
Okay, that's helpful. Aristides, any sense of when we will have more clarity on propulsion and what the, you know, how far out do we have to go? And before you answer that question, just as a quick note, I know we have questions in the Q&A box, and I've been reviewing them as we've been going along. We're almost towards the sort of last 10 or 15 minutes of the conversation. I'm going to get to all of those questions, so certainly put them in if you do, because I think it's important, and I'll make sure to get them out to the panelists. But Aristides, what's your take on propulsion?
That's a very difficult question, very, very difficult to answer. The new buildings that we've seen placed today are either dual engines capable of burning LNG or traditional engines with scrubbers burning HFO. So these are the two solutions that exist today if somebody places a new order. I think 5 years down the line, we will have had a more drastic move, moving away from these emission creating engines, because LNG also creates emissions. It's a short-term solution. It's definitely not a long-term solution. And of course, the same goes with the scrubber and the normal heavy fuel oil. So it will change. It frightens a lot of people, and a lot of us are very scared to put in a new order. So I think the players in the market, which have been reduced dramatically because of the significant losses made in almost all sectors over the last decade. The last decade was a terrible decade for shipping. It was the exact opposite of the previous decade, between 2000 and 2010, which was the fantastic time, and that's why when everybody flooded in. They flooded in, we all together lost a lot of money in this decade. There are less players, I think somebody else also said it, and players that are more in the business. So we are all thinking about what to order. We are not ordering. We have not ordered. That's why 2020, this year and next year are going to be good, because even if you order today, delivery will be in 2023, most likely onwards. So, but because we're seeing the very high rates, we have to see ordering, because otherwise, you know, we'll see astronomical rates, and this never happens, unfortunately. Well, it did back in 2007 to 8, but I would think it won't happen this time. So there will be orders, we will see orders. Coming back just to the container ship order book, I just want to remind everybody, the order book in 2008 was 60%. It was 60% order book on of the container fleet. It's been coming down, and now the last 2 years, it's been around the 10% level, which is reasonable. This 60% order book then explains the 10 bad years followed that, because we overbuilt ships. Now we don't have that, and we are hoping for a more reasonable market going forward. I don't know if I answered the question.
Yeah, no, you did, and I appreciate it. I think it's a good point. The order book can be somewhat generational, or at least decade length, you know, sort of changes. And I would agree, covering the market back then, it was unclear exactly. I think everyone was relying on that sort of usual multiplier of GDP in terms of demand to sustain forever in order to be able to soak up that 60%, you know, order book. And
sorry to interrupt you, but one thing we realized is that, you know, container shipping is now a mature business. It's not a growing business as it was. The multiplier is never going to be 3%, 3 times or 2 times. It's always going to be around 1, 1.5, 0.7, depending on how the world feels on globalization at any point in time.
I think very, very good point, and I think that's exactly right, because we were relying, I think, very heavily on that multiplier for a long period of time, which I think got a lot of people into a lot of trouble and caused a lot of, you know, sort of long-term pain as a result of it. So we have a lot of questions that have come in, so I want to start getting to some of them. Particularly, there's one here that sort of jived with the next topic I wanted to talk about, which was vessel values. So, you know, maybe Jerry, let me come to you. Maybe the first question I'd like to ask you from me is sort of, how do you think about the reaction of vessel values to the charter rate environment? You know, how strong an improvement can we see in tonnage, in the value of tonnage? And then a question from the audience is, what is your policy for marking to market the book value of your vessels? So just wanted to make sure we got that in there for the person on the line. So can you talk a little bit about vessel values?
Sure. So I think 2020 was a very interesting year, especially for certain sizes. The Panamaxes, I think, is the most interesting segment, because back in July, especially after the first COVID hit, or throughout the summer almost, you could pick up a number of 15-year-old ships, a little younger, a little older, at scrap. And by now, their value has probably tripled. That's why I think where we have seen the lion's share of appreciation, as also charter rates have increased considerably. I mean, looking also at the feeder segment, which I'm sure Constantin is very familiar with, or the post-Panamax segment, where we are, let's say, more active, we have seen significant appreciation there. But prices never came off, for example, for post-Panamaxes as much as they came off for Panamaxes. So I think you have to look at different segments and sizes in order to tell a story about second-hand values, but it's definitely one of appreciation. sometimes multiples, sometimes anywhere between 15 to 30, 40%. And I guess the only ceiling until now, especially for the larger ships, were the prices of new builds. Prices of new builds were quite low because, as we all discussed, there was limited interest for these vessels. Now, as we see more interest across let's say, the post-Panamax range of sizes, and new building prices start to appreciate, I think that will also start pushing more modern eco wide beam ships up as new building price, that spread is now widening. But all in all, I think it's, for very obvious reasons, it's an upward trend. In terms of multiples, however, I would probably say that still multiples look quite attractive for certain segments. The question is it because of lack of capital, lack of financing, or simply expectations that the market will adjust sooner than we expect? I mean, that's yet to be seen. Finally, with regard to book values, I'm not sure I got the question, but typically we obviously maintain book values, and we do an impairment test that is cash flow based. And if there is no reason to impair, we don't decrease our book values, but we don't increase them either. So irrespective of what the market does in terms of fair market value. So that's the US GAAP.
Yeah, no, that's helpful, and obviously any adjustments that need to be made on a sale would be taken then, right? Gains or losses at that point would be taken at that point. So that certainly makes sense. Okay, that's helpful. I want to get through some of these other questions that have come on. This one we hit on earlier in the conversation, but it's important because I think from a US investor perspective, there's a lot of questions around congestion and sort of what's going on. So I'm going to wrap a couple of questions into one here. So this question is, when do we think the congestion is going to alleviate? And there's also another question about shortage of containers. And I think they go kind of hand in hand here, right? It's not just the ocean going assets that are congested and maybe sitting off port. Part of the reason they are is because of the boxes that go inland, either on chassis or otherwise, are also getting congested. So maybe Iraklis, I'll throw this your way, but Aristides, I see you shaking your head, so I want to get your take too. So maybe Iraklis, I'll start with you and then go to Aristides.
Well, if I can say about our own experience on this with our own fleet, on our 63 fleet vessels, we had only 3 vessels with 1 week delay in the US West Coast, and we had 1 vessel with a blank sailing. There is a lot of demand for tonnage to get containers, empty boxes from US and Europe back to Asia. And I think that during the Chinese New Year, as time is going by, congestion may ease a bit. Very difficult to tell. But as far as we are concerned, the more the congestion, the less the ships available, the better for the charter rates.
Okay, makes sense. Aristides, do you have a view on this, on the capacity?
The only thing I wanted to say here is because, as we said, congestion is a matter of the bigger vessels, which we don't have, so we don't actually see it, but it's something that is there, and I don't know when it will end, but somebody else said that probably the effect will not be that huge when it ends. But I wanted to say that the issue with the container boxes, of having container boxes, has been a very significant one, and there is a lack of them. The companies that own these boxes and are manufacturing and building these boxes are now working very hard to provide new containers. This is a process that happened once about 10 years ago, I can't remember when, again, where there was a lack of container boxes. This can be solved in a small period of time, relatively small period of time. I do not expect us to have this issue in a year's time. It will have been solved. They manufacture them quite quickly. But obviously, if they are there, they have to be filled, hopefully, and we will have to transport them. So that's not a bad thing for us, the fact that they are making more container boxes.
Okay, that's helpful. That's good color, because that is one of the areas where we're seeing that congestion kind of build up. I have another question, Constantin, maybe I'll come to you on this one. And this sort of basically, if I can summarize it, is about the potential for reversing slow steaming. So for a long period of time, there were extra vessels added to loops because of the deceleration of the pace of the fleet, right? So slow steaming, essentially. Is there capacity out there, do you think, to potentially speed things up? Or does congestion kind of negate that? Because why do you want to send, a ship a week to LA Long Beach if that first ship is not clearing within the first 3 days it's there, so it's sitting there when the next vessel gets there? So any thoughts on sort of where slow steaming is, and maybe could that be adjusted as a way to add capacity?
Well, it depends on the trade, and I think on some of the main haul trades that would be an option, but you already gave the answer to some extent in terms of congestions. I mean, it doesn't make sense, and some of the blank sailings out of Asia into the US have actually been blank because people know, well, we'll be sitting there anyway, right? So I think this is certainly something that can happen. On the other side, we all know that the faster a ship goes, the bigger the let's say the greenhouse gas emissions, for example, right? I mean, I think going forward we will rather see a trend towards slow steaming in order to address that very topic. If you look at EEXI, CII, the new regulations that are currently being kind of brought into the mix, in all likelihood as of 2023, will, in my view, certainly lead to more slow steaming rather than speeding up. On the short term, it might be an option, but it depends on the trade, because, for example, on some of the trades we operate in, it's a liner service, regional trade. You have port call almost every day. So the speed of your vessel is pretty much predetermined by the structure of the trade. And as such, speeding up or going slower is not an option because it's part of the overall trade lanes. So I think maybe on the long haul trades, that's possible. But again, with the caveat of what I've just said on greenhouse gases and decarbonization of the industry, but on the more regional trades which we operate in, I don't see that being a trend.
Okay, that's helpful. All right, so a couple more here that have come in that we want to make sure we get to. I'm just going to go through an order here. I think someone's asking about when the market might come back to business as usual. I think the panel has sort of answered this, generally speaking, that it's a little unclear exactly how this plays out. Expect demand to stay relatively strong. And obviously we know what's going on with the capacity. So I think that's kind of been answered here. I think the other factor, that the other question we got here is, I guess maybe a little bit more specifically on smaller ships on the older side. Anybody have a particularly, I know, Constantin, you can talk to smaller ships. Aristides, I think too. Any view, maybe we'll go to Aristides, any view in terms of what you're thinking about sort of the market for the smaller vessels? I think everyone's enjoying this uplift. Anything specific there, quickly?
All the markets are enjoying a good market. Smaller ships as well, and older ships as well. So if you have an old ship, well maintained, you can trade equally well with a younger ship, and up till 2015 with very similar greenhouse gas emissions. It's only after 2015 the ships that are built that are a little bit more economical to run. But running older ships in today's market, which have very little left to repay, is really a great opportunity, and we are making on our elder, smaller ships very significant returns, at least on a percentage basis. We scrapped 5 vessels in the first part of the year, which were very old. That's what helped us survive without any problems, because they were always an option. Now we are capitalizing on that option of having several quite old ships.
Okay, that's helpful. Jerry, you got a question on scrubbers. I don't know if you have a take on whether you think scrubbers are profitable at this level. Is there a reason to be thinking about scrubbers? It sort of seems like some of the IMO stuff kind of came and went and got sort of overshadowed by COVID. But what's your take on scrubbers?
Well, I do think that especially for larger ships, anything above Panamax, I would say, but potentially even for Panamaxes, depending on the spread, scrubbers do make economic sense. The spread has recently widened, and increasingly, we even have heard anecdotal evidence of people looking at scrubbers again, which is corroborated also by the interest of liners. The issue, of course, that remains is what you mentioned. What will be, in the end, the IMO policy towards scrubbers? Already many ports are not accepting open-loop scrubbers. For the moment, it has only minimal adverse impact on the ships that carry scrubbers, as their stay in ports is limited. But if this extends to more ports or to, let's say, wider ranges, then can you really use scrubbers in the future? We have also seen interest as of late in hybrid scrubbers, much more than there was a couple of years ago. But if you ask me from a ship owner's perspective, it's not a bet that we would take on our own. We never actually took it. We have installed 7 scrubbers, and all of the scrubbers we installed were pre-agreed against an increased rate. So we deployed the capital and we got a return on that capital for a specific amount of time. So, and that was in 2018-19. I think given the current environment, we would be even less inclined to install a scrubber unless we have a very specific return or it is fully paid by the operator.
Okay, that's helpful. Iraklis, I want to come to you. There's a question about the crew situation. And so I think this is about, crew changes and flexibility in the context of sort of the COVID constraints that we have. How do you feel about sort of how crews are adapting and whether you're able to change them as frequently as you'd like, and if there are any other hardships that are kind of playing out through your crew situation?
It is really a very big problem. It is a problem that practically no one.
Looks like Iraklis might be frozen here. Maybe we can. Yeah, looks like he's frozen. So hey, why don't I move around a little bit while he's trying to get that connection back up? Constantin, do you want to take this one?
Sure. I mean, he's back. So
are you back, Iraklis?
Yeah. Can you hear now?
I can. Yeah. So yeah, it got cut off at the very beginning of your answer. So if you want to start again, that would be great.
Yeah, I was saying that the situation is really bad. We have people on board that they are for 7 and 8 months. Nobody actually is taking care of it. One of the big problems is that most of the flag administrations do not really have any influence into the global political environment for the seafarers actually to be taken care of. We have situations where even sick people cannot go out, not sick from coronavirus, but just with normal sort of emergency situations. It's an extremely difficult and tough situation. Most of the shipping bodies are trying to influence the government to do something about it. It's a very big problem. Of course, for companies like us that we have long-term loyal pools, we have people standing by, and anytime that we see a traveling window, we are trying to make changes, but certainly we would expect that the normal period of contracts, which used to be 4 months, is not there to stay anymore. It is a difficult situation, very difficult situation. It's a wait and see. It's a reactionary strategy. You cannot have really any proactive strategy on this problem. Very big problem.
Yeah, no, and it's such a challenge for the folks at sea. So appreciate that color. All right, so we're basically at the end of our time. There's one interesting question that I do want all of you to answer if you can, and I would ask if you could be brief, kind of 30 seconds or so. I'll start with Constantin. The question is, what do you guys do from a company level with sort of, I don't want to say the windfall, but with the strength in the market? Is this an opportunity to shore up the balance sheet? Do you want to put new orders in? Do you want to pay a higher dividend to your shareholders? What's the strategy? How do you take advantage with the environment we're in? What's sort of the strategy going forward from a company standpoint?
Obviously, first of all, renewing the charters in this environment to really lock in these earnings. We have quite a spot exposure. We will be done basically with our fleet and renewing them in the new environment by early May, in all likelihood. So we will have all 65 vessels then on the new elevated level, generating significant cash. We believe there are a few ingredients. Firstly, to delever the company financially. We have such an operational leverage in this rate environment that we would want to delever the company and at the same time become a dividend stock that has significantly low residual value risk, because this is what ship owning is all about. And this rate environment you can really use to de-risk your residual value risk. And that's what we are going to do in combination with the dividend.
Perfect. Aristides?
Yes, as I said before, we all have to see what we do with our profits. This is a wonderful problem to have. Finally, it's been 10 years since we had that issue. One solution is what Constantin said: delever, pay dividends. The other solution is grow a little bit. There are many things to review. We will review them. We are still at the shock of where the market has moved, and none of us had really predicted it would go there. We will review.
Perfect. Jerry, how about you?
Well, I think we will balance a growth strategy, but at the same time returning capital to unit holders. We just announced a unit repurchase program of 30 million for the next couple of years. And at the same time, the unit repurchases we expect to be very accretive because we are trading at a big discount to NAV. But at the same time, we concluded an acquisition of 3 Panamax ships. Hopefully, there is more to come. So I think it will be a balance. Balance, it looks pretty good in any case right now, so we're not especially worried about that.
Iraklis, you've seen some great stock performance. What do you do?
Well, having sufficient firepower to move quickly when a second-hand opportunity is coming up, like we did 3 to 4 months ago with purchasing 6 post-Panamax vessels, deleveraging, and giving value to our shareholders. It's very clear.
Okay, that's very helpful. I think we'll leave it there. That was a great conversation. I think we covered a lot of ground. Gentlemen, thanks very much for your time. Nicholas, thanks for hosting. As always, these are great events, and thanks for everybody on the line. I think we had as many as 225, maybe 230 people on the line, so that was great. Thank you.
Well, thank you again. It's been a great discussion. Container sector right now, it's at the forefront of activity and interest. So I'm delighted we were able to host this top level panel today. Thank you very much. And we will see you all March 2nd and 3rd.
Thank you, Nicholas. Thank you very much.
Thank you, Nicholas. Thank you, Chris. Thanks, Nicholas.
Goodbye.
Take care. Bye-bye.
Bye.